Any stocks in the skies, stay away from this ride. Don't be fooled by the thrill, they're just waiting to kill. Promised dreams, empty talk. Empty talk, they'll leave you in shock. Don't be tired, be smart. Don't invest your whole heart. They'll promise you gold, believe you in the cold. Pump and dump schemes, it's all a smoke screen. Don't be fooled by the hype, don't get caught in the gripes. Don't be tired, be wise. Don't fall for the lies. Don't be tired, don't buy the hype. Penny stocks are just a slippery slide. Don't be lured by the dreams they sell. Avoid the trap and save yourself. Empty talk, they'll leave you in shock. Don't be tired, be smart. Don't invest your whole heart. They'll promise you gold, but leave you in the cold. Pump and dump schemes, it's all a small screen. Don't be fooled by the hype, don't get caught in the gripes. Don't be tired, be wise. Don't fall for the lies. Don't be tired, don't buy the hype. Penny stocks are just a slippery slide. Don't be lured by the dreams they sell. Avoid the trap and save yourself.
Oh, brother, oh, brother, oh, brother. Hey, what's up, duties? What's up, duties and dudiettes? Hope you're having a good one. I think we're gonna have a good time today. I think we're doing a little bit of a specialty Sunday fun day chit chat about what the heck is going on in the world. So, as always, as you can tell, I don't really discriminate the time of the day in which I ingest my coffee. It's all day. I know many of you see me doing it in the morning, but if you had a video camera on me all day, like in a Truman-esque sense, you'd be like, wow, this guy, it's way too much caffeine. Way too much caffeine. But hey, I suppose that's just what we're going to do here. That's 100% what we're going to do here. I do appreciate you taking the time out of your Sunday to hang out with me. I'm going to make this as quick and succinct as I can, but I just want to get across what I perceive to be some important information so everyone can prep up for the upcoming week. So here is the name of the game. What I want to do is very, very quickly review kind of some of the key things that went down last week. And then I want to prep you up not only for the month of June in terms of like the big things coming out in the month of June, but then also more so of a focus of this upcoming week. Excuse me. From there, we'll do a little bit of chart review. And then after that, I'm more than happy to open it up to like any questions you guys have. If you want my thoughts on a chart, if you want the short interest numbers, anything like that. So basically, quick review of last week, a little preview of the month of June, more specifically the first week of June, some chart stuff, and then from there, a little bit of Q&A. So I hope that sounds like a plan. I am definitely not going to keep you guys for too long or anything like that. I think sometimes when we do the Monday, Tuesday, Wednesday, Thursday, Friday thing, it's very easy to get like focused in on like that specific day, like what's happening in real time. And it's a little bit more like day trading focus. I think there is a time and a place to take a slight step back and kind of look like at a multi-day, multi-week type of a trend. So it's just a little bit of like bigger picture type of stuff. So hopefully that's all good. Hopefully that sounds buenos nachos to all of you. Obviously, don't forget to get your cup of coffee and all that. Oh, also don't forget to hit the like button and whatnot. That helps out and it gets other people to pay attention and watch. So it'd be super, super beneficial if you're sitting right there and you just smash the like button. And also don't forget to subscribe. And with all that being said, let's get rocking with the show. I'm not mad about it, and I'm saying that because I actually am mad about it. But this rally that we saw at the end of the day on Friday, the final half hour, absolutely nuts. Truly insane how much this popped at the last second there. Disgusting. Absolutely disgusting of how much this just rippity, skippity doodad. And I suppose it is what it is. That one, painful. The Piper signal Friday, pretty much, it was a bit bearish, as lightly bearish as it could be, and still have a signal, and I'll explain that in a second. But this last push, man, I hope you guys caught it. I don't want to sit here in my own misery and my own pain. I hope some of you guys were like, oh, dude, we played it to the downside. We played it to the upside. But man, oh man, what a crazy, crazy push. Actually, on that note, maybe that's a good place for us to start. So the newsletter should be out. I know that some people had some issues with the images being loaded or not loaded. I double checked. They're in there now. So obviously just feel free to go to mattkohrs.locals.com. But some people were reporting that they weren't seeing the upcoming earnings or the seasonality. They should be there now, so just make sure you're checking it on the website. And yes, this is much more of what's coming down the pipeline, as in the major macroeconomic events, obviously the earnings and the seasonality for each individual day. And I want to touch on that, but I just want to take a quick second to kind of review last week and what happened. So obviously, in a general sense, this uptrend still very, very strong. Everything changed in November of 23, and since then, all we've had is higher highs and higher lows. If you just really look at what this roughly 7-month period, higher highs, higher lows, even this like just pulled back, didn't really get pushed down, pushed even higher. Even recently, as on Friday, we came to the bottom side of the EMA cloud here. And just so you guys know, I know this is fancy looking, like the colors, the red, the green, the blue. Understand that these are just a bunch of different EMA lines. I think it's anywhere from like the 8 up to the 48. And so it's just colorized, which makes it, in my opinion, a little bit more like visually clear to understand what these moving averages are doing. But overall, the uptrend is still intact. Now, I'm bringing this to your attention because part of this show and part of my overall show is still talking about how crazy the economy is right now. And please understand, just because the economy is good or bad, yes, sometimes there's a correlation with the stock market, but not always. So right here, we are not far away from an all-time high, and I think most of us would agree that we don't think the economy's at an all-time high. So right there, that's a perfect example of, yes, it's good to pay attention to what's going on with the economy, but if you're trying to overlay that into like the day-to-day movement of the stock market, you're probably going to get eaten alive. They are correlated, but they're definitely not the same thing. And you could actually even argue that we would naturally go higher in prices when inflation's up, because on an inflation adjusted basis, are we really at a high? When you see high levels of inflation, you see that in many assets. And when people think of assets, they're commonly thinking of something like real estate, but that is very applicable to stocks themselves. So for example, let's say you have a company that hits $1 billion market cap this year. And let's just take another company that had a $1 billion market cap 10 years ago. Obviously, on an inflation-adjusted basis, the one that hit it a decade ago was actually a much more valuable company, because that billion-dollar valuation, well, the dollar just went farther. And as you continue to inflate and inflate and inflate, if you're hitting $1 billion now, well, even though nominally it sounds the same of, oh, it's worth $1 billion, well, $1 billion itself is worth less. It has less purchasing power. So in these heightened inflationary periods, as you go up and up and up, please understand that sometimes you're on an inflation adjusted basis. You're actually not hitting a new high. It depends on how much you go up relative to inflation. So there's some intricacies there, but one of the things that I see quite a bit in chat and even discussed in Discord is like, hang on, does this really make sense? Like, why is the market going higher and higher and higher when the economy is not? And please understand that even though they are correlated, they are still two very distinct things, and you got to learn what those nuances are. So regardless, the market, it is ripping. It's looking strong. We had a little bit of weakness in the past week, really Tuesday, Wednesday, Thursday, Friday. Well, excluding power hour Friday. Lower highs, lower lows, and then all of a sudden you can see it right here. The final just half hour went rippity skippity doo-dah. And it was actually this push that was just enough to kind of screw over the final Piper signal. Now, for those of you who don't know, in the Discord right here under the Piper strategy, every single day, if the Piper strategy fires, I share it with everyone. So let's just start here. Obviously, there's nothing on Monday, May, the 27th, because the market was closed. But then obviously Tuesday, Wednesday, Thursday, Friday, it did fire each day. And we were basically 15 minutes away, 30 minutes away from having an absolutely perfect week. So you can see the timestamps and whatnot: 10:44, 11:34, 10:42, 10:13. As soon as the signal fires, I basically just share it with oh, you guys cannot see this. My bad. Let me switch it over right here. Sorry about that. This is the Discord right here. This is the Piper strategy channel. And this is just where if Piper were to fire per day, this is where I put it in there. So for example, this past week, it fired 4 times: Tuesday, Wednesday, Thursday, Friday, because the market was closed on Monday. But anyway, right here on Tuesday, May 28th, it fired at 10:44. The 29th, it fired at 11:34. And on the 30th, it fired at 10:42. And then to wrap up the week on the 31st, it fired at about 10:13. Now, I did, I guess, go out of my way to try to better break this down, but all the green ones are the ones that it hit and hit 100% profit. This red one, it was fine up until, I mean, it had to be below 27, right? That was the official call out, 526. So when did it finally get back above? Yeah, no, actually, it was fine until, wow. I didn't realize that it didn't go bust until the final 5 minutes. It was perfect. Piper almost had a legitimately perfect batting 1,000 week until the final 5 minutes of the trading day. That's absolutely crazy. Now, obviously, a lot of people, if you're individually taking it, like yourself, there's a good argument that on Friday, you're probably like, oh, no, I'm happy with these profits. It's power hour. I got like things to do. I'm going to the bar. I'm hanging out with my family. I'm hanging out with my friends. But just in terms of reporting, I kind of have to have like a very transparent, measurable way to report. So I just look at where it is at 4 p.m. And technically at 4 p.m., this one was a bit bust. So I had to report it that way. But even with that unfortunate bad beat, overall, still pretty solid. When its accuracy this past week was 87.5, it went 7 for 8 signals. And obviously, in terms of confidence, as the confidence gets higher, the system recommends more. So when you look at the unit based, it was actually 12 for 13, because some of these are 1x multiple, some of them are 2x. But basically, all of this stuff, to explain it a little bit better, it's kind of advanced. I think it can sound scary when you're doing call credit spreads and put credit spreads, which they're types of verticals in the options market. And I know if you've never really traded options before, that can seem daunting and maybe a little bit scary, but I promise you it's not. By the time you trade it a couple times, you get into that situation where you're more surprised that you had a learning curve. So like, I know at the bottom of the learning curve, and folks, I was there myself, I'm like, dude, what is going on? This doesn't really make sense. Like, I'm selling, I'm buying, I need it above, I need it below. What does it mean? But I'm telling you, as soon as you do it a couple times, it actually does become relatively simple. But just to review how this all went, just for the sake of transparency. So this past week, we started on Tuesday, the 28th. And how did this one go? So on Tuesday, it was weaker signals, 1x and 1x. The first one returned 11. The next one returned 6. So in total on Tuesday, the total return was $17. If we go to Wednesday, that was a little bit more confidence, a 2x multiple and a 2x multiple. That returned 24 and 28. So that was 52 in total. And then on Thursday, the 30th, that was a 2x and another 2x. So that was 16 and 18. So that returned 34. And then fast forward to Friday, where the signal that ended up missing and lost $95 was only 1x. And then the one that hit was a 2x right here. And that ended up returning 18. So in total on that day was a loss of 77. So on the full week, the Piper signal ended up at its minimum unit sizing, like the smallest unit you could possibly take. That's how it just, and obviously you could scale it up. But at the minimum unit sizing, it returned $26, and the minimum unit sizing that you would have needed in your account to do so, aka also the max risk, was 166. So this for the entire week could have been scaled up. For every $166 you have in your account, if you call that your unit, it could be scaled up, but that would be the minimum sizing, the minimum money you would have need. And at that minimum sizing, you would have had a return of $26. It went 7 for 8, so 87% accuracy. And in terms of units, it went 12 for 13. So that's just a quick review. For those of you who are curious, I post my trades in here personally of how I'm doing it and the updates, and then also the new channels, more of my swing plays, and we'll be focusing a little bit on that in here today. But just wanted to talk about the theoretical performance of Piper, my personal trades using Piper and some other things. And then obviously we have some swing trades as well. So just wanted to let you know, I guess last week, not only a little bit of the charting and the technicals, but of just this crazy close of I was that close, or I shouldn't say Piper was that close to having a perfect week. And I cannot believe it was the fine. I mean, look at this. I needed it below 526, and it was below 526 literally until 355. It was the final 5 minutes that screwed this over. But hey, that's the market for you. Sometimes sometimes you just have a bad beat, and that's the game of trading. It is what it is. You can't complain that much about it. So there you go. Obviously, if you guys are interested in this, you could sign up. The first month is free anyway. MattKohrs.locals.com. Locals is the community center where I can email people. I'll give you the Piper signal. It's how you can get connected to the Discord. But Locals, MattKohrs.locals.com, that's like the main way to get connected with everything. Just want to throw that out there. And now let's talk about the week ahead. But before we get to the week ahead, I like to generically let everyone know about the seasonality. Now, I'm sure many of you have heard the saying, sell in May and go away. That doesn't make sense. Statistically, you wouldn't want to do that. A better saying would be buy in May and then come back from your summer vacation and you're going to be a little bit richer. If you look at the seasonality of the summer period over the past, 3-4 decades, it was actually advantageous to be bullish in the summer months. So with respect to June, it's a little bit choppy, a little up, a little down, a little up, a little bit more down. But then you get to July, and July is notoriously bullish. The final week of June till the entire end of July, pretty strong. And then there's another surge all the way up until mid-September. So that whole saying of sell in May and go away, that's actually silly. You want to kind of buy at the end of May. And then when you're getting ready for, I guess, the autumnal season, that's when you want to take some of your money. And even then, it's just a little bit of a breather in October, and then it rips again. So I don't know why we have that saying. I just want to let everyone know that June itself is a little bit choppy. The start of June is bullish. The end of June is a little bit more bearish. But overall, that whole summer saying, it's wrong. It's 100% wrong. This time around, this isn't this week. It's actually going to end up being next week. So in 2 weeks from now, I just want to put the major things you should be paying attention to in the month. The big thing is going to be on June 12th. That is going to be the conclusion of the next FOMC meeting, the Federal Open Market Committee meeting. That is where they decide the Fed fund rate. Currently, the Fed fund rate is sitting at 5.25% right here. And as of now, there's a 96% chance that we stay at 5.25%. This Fed Watch tool, it's free for everyone. If you just search CME Fed Watch tool, you can look at this yourself. It's been very, very accurate. Actually, I don't even know the last time it predicted something wrong. It's been quite a while that it's been nailing all of this stuff. But as of now, it's not guaranteed, but there's absurdly high chances that the Fed fund rate will not be changing. And then if we fast forward in the July one, the next FOMC meeting is that going to be at the end of July after the June one, 84% chance that we're still at 5.25%. And in all reality, the odds don't actually even change that much until you go all the way to September. And even then, there's still a 45% chance that we're at 5.25. By the time you get to November, that's where the odds actually start to increase for some form of a rate cut. But please understand that right now, when you're this far out, the confidence level of these predictions is not the highest, because obviously between now and then, there's just an absurd amount of events that everyone needs to be paying attention to. You have CPI reports, PCE reports, retail sale reports, you have earnings, you have unemployment reports, you have crazy political turmoil. So there's a lot going on. So as you get closer, the confidence levels go up. And right now you could say the one with the highest confidence level is June, just because it's the closest one. And as of now, there's a 95.6% chance that there's going to be no change to the Fed fund rate. Now, what does that actually mean? Now that you know it's going to be impactful for the market, like what does that mean? Like in actuality, well, that means that the market has been horribly wrong, because in December of 23, coming into this calendar year, the market was expecting 6 rate cuts. They were saying, okay, cool, we're winning this battle on inflation. So that means the Fed can kind of take its foot off the throat of the economy via quantitative tightening, via jacking up the Fed interest rate, blah, blah, blah. And if you've been looking at anything lately, you actually know that prices are still sky high. The cumulative inflation rate over the past roughly 3 years is 20%. In a general sense, 20% higher, which is crazy. And unfortunately, the final percent or two, remember, our target is to inflate at 2% per year, and we are way above that right now. And granted, the peak of June of 2 years ago was way higher. We were at 9, and we're coming down, but we're still in the realm of 3%. We're still about 50% higher in terms of inflation on a yearly basis than where we should be, and that's exactly what the Fed is trying to battle. And the longer this persists, the worse the situation is going to get. So in terms of the month of June, not necessarily the upcoming week. Yes, this upcoming week, there are important things like the unemployment report coming out Friday. That will be a pivotal one. But just for the month of June, the fact that we have an unemployment report, we have multiple inflation reports, we have consumer confidence, we have retail sales, we have the FOMC meeting, we have Fed speakers. There's a lot going on. In terms of the higher level view, please keep this in mind. Key engines of U.S. consumer spending are losing steam all at once. That's no bueno for the economy. That is absolutely no bueno. The main drivers behind the remarkably resilient American consumer are losing steam at the same time, suggesting a recent pullback in household demand may be more than just a one-off. Now remember, the Fed, Jerome Powell, and all those other cronies, the whole goal is to bring down demand, because one way to fight inflation is to lessen demand, and that's what they're trying to do. So in a weird way, this bad economic sign is actually kind of good, because then people could interpret it, the market could interpret it of like, oh, okay, like, are they actually finally like getting rid of that like final sticky portion of inflation? Real disposable incomes have risen only modestly over the past year. The saving rate now stands at a 16-month low, as households have mostly exhausted the extra pile of cash they squirreled away during the Rona period. In turn, many Americans are increasingly relying on credit cards and other sources of financing to support their spending. Pretty much every single day, I'm showing you guys different quantitative and qualitative measures of the average person's not really slowing down on their spending. They're just choosing to like keep with their normal spending habits, and they're jacking up their debt. So whether you look at auto loans, credit card delinquencies, bankruptcies, in terms of that measurement, things are not looking good. People are not changing their spending habits. They're running out of their money, so they're just choosing to like get more debt. U.S. real disposable income growth slows down. Main driver of spending grew only 1% from a year ago. So this trend down and down and down and down. Slower labor market momentum will continue to limit income growth and push more families to exercise spending restraint amid reduced saving buffers and higher debt burdens. Factoring increased price sensitivity, household spending momentum will gradually cool. Not so bueno. That's not what most people want to be seeing. In a weird way, it's what the Fed wants to be seeing right now. But in terms of just like me, you, humans trying to like buy food and pay our rent and our mortgages, the quality of what's going on right now in the economy, it's definitely more negative than it is positive. Has stagflation been confirmed? Stagflation, it's like the word that the economists don't want to say. Stagflation is like kind of the worst of both worlds. Generally, if you have inflation, prices are going up, you still have economic expansion. And sometimes you get into a super bad situation where you have inflation, everything's becoming more expensive, but the economy is actually weakening. It's, like I said, the worst of both worlds. And right now we're in a weird situation where inflation's still bad, and all of a sudden we're starting to look at measures of the economy, mainly the GDP, gross domestic product. And if that's going down, now people are starting to say basically the economic swear word of stagflation. The second reading of the U.S. Q1 2024 GDP just fell to 1.3%, below the initially reported growth of 1.6% last month. Remember with GDP, they give you the number, and then they do like a first revision, aka a second reading, and then they actually do a whole nother one. But the fact that they had to readjust it from 1.6 to 1.3, I mean, you could see it right here on the chart. The economy is not going the way it should, and inflation is still increasing. So we're in that potentially stagflation situation where, economy is going down and inflation is going up. That's what you don't want. This is 60% less than the 3.4% we saw in Q4 of 2023. This downward GDP revision primarily reflected slower consumer spending of a drop of 2%, down from the previously reported expansion of 2.5%. So they were wildly off on that prediction. Meanwhile, the core PCE, the personal consumption expenditure, that is the favorite inflationary tool of the Fed. It's very similar to the CPI, but it's a little bit more broad in what they account for, and it's also a little bit more timely in the reporting. Anyway, that one hit 3.6%, up sharply from 2% reading in Q4 of 2023. Weakening economy with rising inflation is the worst outcome for the Fed. Is the Fed trapped? Obviously, only history will know, only time will know. But right now, it's not looking good. So as much as I might sit here and talk about the government and the big level of it all, I mean, we're almost at 34 trillion in debt. Now our biggest payment as U.S. taxpayers is actually going to servicing our debt. We're actually now spending more on our debt interest payments than we are on all of our national security. And so it's bad at the large government level, but then also on an individual level, like just looking around, I'm here in New York. Things are not good. Like things are very, very, very much not where we want them to be. A lot of people, that article I was just reading, the money that was saved, the cushion that we have from the Rona period, it's been slowly but surely getting dissolved. And now all of a sudden, as that's getting closer and closer to the average savings getting close to zero, we're starting to see debt and delinquencies and just credit card. I mean, the credit card debt in the US is 1.12 trillion right now, and delinquencies are up in the realm of like 8.9% for the first quarter of 2024. Not good. And it's actually on that note that this is the perfect segue to this particular stream's partner, pdsdebt.com. It's pinned to the top of chat. It's in the description of the video. And just more of an individual level of what this is. They're offering a free debt analysis. It's 100% free. It only takes 30 seconds of your day. So if you are a person who is currently battling the burden of personal loans, credit cards, medical bills, collections, PDS Debt might be able to help. The whole point of them is, once again, it's free analysis. It'll only take 30 seconds. And their whole goal is to consolidate your debt into one low monthly payment. And in this process, not only might they be able to save you a bunch of time, but they actually might be able to potentially save you thousands of dollars in what they're going to be able to offer. Once again, it is free to check it out. It's only 30 seconds of your time to see if they could assist you with one of these things. Specific to PDS Debt, I implore all of you to do your own research on it, but you're very quickly going to find that they have an A+ rating from the Better Business Bureau. They're very highly rated on Google. So worthwhile to check it out. I just wanted to share it with you. It is pinned to the top of chat. It is in the description of the video. And I guess the official read here, I just want to let you know, PDS Debt cares about helping you get out of your debt. Check out all the reviews and see how many mention PDS Debt employees by their name. It's incredible. Get a free analysis right now at pdsdebt.com/Kohrs, Kohrs. It only takes 30 seconds. That's pdsdebt.com/Kohrs. Once again, pdsdebt.com/Kohrs. Pinned to the top of chat in the description of the video. On a personal level, I get that debt is absolutely horrible. Most of us, a high percentage of us at one point in our life have had to deal with it. So this might just be a very reasonable, helpful solution to all of you if this is something that maybe is a burden that you're currently carrying. So check it out, pinned to the top of chat in the description of the video. Obviously, shout out to PDS Debt. Hopefully they can help you. All right, now bringing it more specifically to this upcoming week. Just so you guys know, the newsletter is out, mattkohrs.locals.com, just kind of breaking down what happened last week. Now, in terms of the upcoming market events, for Monday, tomorrow, June 3rd, depending on when you're watching this, we get some ISM numbers. Tuesday will be interesting because that's the JOLT job opening, and that's a half hour into the market day. We get some non-farm employment change. The European central bank, so the equivalent to our Fed, they're going to be making some of their interest rate decisions, similar to how we are next week. But the big one's going to be Friday when we get the unemployment report. So I would say that JOLTS is important. Yes, non-farm employment change, that's important. These are all going to be impactful, but I think the star of the show is going to be Friday, an hour before the market opens. We're getting the unemployment report. Now, with respect to earnings, right here, you can see some of the most popular ones. I know some people like GitLab. Some people are talking about Bath and Body Works. There's CrowdStrike. There's Dollar Tree, Lululemon, ChargePoint, Neo, DocuSign. Right now, we technically earnings season is still on, but like all the big hitters have pretty much already reported. So I just want to let you know that yes, we're still technically in earnings season, but it's not like we have any like mega huge like monster market cap companies reporting. But I just wanted to call out the ones that I think you might be most interested in. Now, we spoke about the seasonality for the June where it's a little up, little down, little up, more down to conclude the month. Well, for the upcoming week, to kick off the week, Monday, it's leaning bullish. What I did to get all this data was I looked at this individual trading day over the past 25 years, and I did the hypothetical saying of, okay, what happens if I bought it open, sold it, closed on the S&P 500 futures market, which I bring that up because it does include the overnight session. What would the equity curve look at? So basically, it's one trade per year, and you can see that Monday, not too special. But what's interesting is Tuesday is one of the most bullish singular trading days of the entire year. Tuesday, June 4th, over the past 25 years, this is incredible. This is phenomenal. The bulls have won this 80% of the time. Folks, do you know how much of an edge this is? Most of the time it's just 50-50 and we're like, oh, okay, plus or minus like a 5% like error from that point. The bulls have won Tuesday, June 4th, 80% of the time. 4 out of 5 years, the bulls have won this day. That is incredible. The profit factor is absurd. 14.53. Actually, don't even know the last time I saw a profit factor above this. So the bias is not just bullish. It's not neutral. It's not leaning bullish. It's not bullish. It is very evidently strongly bullish. Very, very, very bullish. So I just wanted to bring your attention to that on Tuesday. Wednesday, leaning a bit bearish. Thursday, leaning a bit bullish. And then Friday, a little bit more bullish. So just want to let you know about the seasonality for the upcoming week. And then from there, we already did the Piper thing. Once again, if you want Piper or to trade with the Discord community, MattKorzOutLocals.com. My mod will drop it in chat. Obviously, we reviewed how Piper on the week at the minimum sizing of $166, it would have returned 26. It went 7 out of 8 in 87% accuracy. And really, it was about to go perfect until the final 5 minutes on Friday, which were incredible. Speaking of the final 5 minutes, it is this, I guess, I forget all the names. I don't know. All these candle bars, they have like, I don't know, this is a shooting star or a hammer reversal or some crap like that. All these, whenever absurd things happen, everyone and their grandma has a different name for it. But what you need to know is the fact that this right here, it's bullish. When you open up, sell, 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 and then people are cool. I want to buy the dip. The market was interested in buying this dip. And not only do they recover, but you get a bullish engulfing candle that keeps pushing. To me, that is bullish. So my bias going into the first, let's just say half of the week, also with the seasonality of Tuesday in mind, is going to be bullish. So this was clearly bearish, lower highs, lower lows. And then apparently the market got low enough that they're like, okay, cool. And it ended up pushing the equilibrium higher. So very strong there. In terms of the overall market, especially for like maybe the shorter term swing plays, like holding for maybe 1, 2, 3 days, something like that, I myself will be looking for some bullish opportunities. But I do want to let you know there are still some downside gap fills on the SPY. Eventually, these are going to get filled. I don't know when. If I did know when, I'd have unlimited money. But eventually, the SPY will come down to 512.55. Eventually, it will come down to 505.89. So I just want to put that on your radar. In terms of upside gap fills, there are no upside gap fills right now. All that we really have to look at is the all-time high of 533.07. And once again, this is for the SPY ETF. Similar on the Qs. The Qs actually got one of their downside gap fills that we saw between, what was this, Tuesday and Wednesday, the 14th and the 15th. I should probably mark out the all-time high right there, 460.58. Technically, there are still also 2 downside gap fills on the Qs, 436.48 and 427.81, but very similar situation. I do want to point out that the Qs on a relative basis to the SPY is a bit weaker. It wasn't bullish engulfing. It didn't push the high the previous day, but still a very strong recovery. Very strong recovery. The futures market, depending on when you're watching this, the futures market's going to be opening up at 6 p.m. tonight. So if that's bullish, which I think it will be, and it can persist to tomorrow, I think the first half of the week could definitely be a strong one. So anyway, The SPY and the Q is not the exact same story, but a pretty similar one. So I just want to let you know about the seasonality. I wanted to let you know about the classic, just A, B, C, D. Looks like we're going for it again. A, B, C, D. Definitely leaning a bit bullish in the short term. Bitcoin is holding its breakout. Broke out in mid-May, push, came down, consolidated. I'll be looking for a push above 70,000. A push and a close above 70,000 in my book would set up the next leg to the upside. If that does happen, I'm already invested in Bitcoin. I don't really actively trade it at the moment, but I would be looking for related plays such as coin, where if that were to happen, obviously we know there's a high correlation. I'd be looking for coin to swing back around, push and hold above 250. I think that sets up 265 and then maybe potentially a test of 280. The other darling of the market right now is Nvidia, for good reason. This thing is just the gift that keeps on giving, ripping, ripping, ripping. Itself, actually, I don't know if I thought it did hit this gap. Nope, it didn't. There's a couple downside gap fills. 1064.75, 960.20. I don't know how much longer that's going to really matter though, because there is a 10 for 1 a 10 for 1 split, a normal split coming up on Monday, June 10th. I do want to let you know, I don't know how it's specifically going to play out with Nvidia this time around, but I have done some research on how stocks perform up to their stock split and right after their stock split. I don't know if any of you guys have any guesses on it, but stocks do typically do well up until their stock split, and then after their stock split end up having a bit of a decline. So yeah, I guess in your mind you could think of it as like a buy the rumor, sell the news type of a deal. It's not exactly that, because like we know what the news is going to be, but just I guess for a little bit of commentary of historically how these like mega cap tech stocks have played out. Yes, up until the stock split, it's a bit bullish. And then from there, there's a bit of a decline. So just want to let everyone know that if I had to arbitrarily be bullish or bearish from now up until whatever it was, June 10th, I would pick bullish for Nvidia. Netflix is another one that's been actually quite strong, just recovering higher and higher and higher, taking a little dip with the old tech sector. But if this can swing back around and push 650, I'd be looking to the upside. Meta's been flat and boring, but I kind of like that because remember, the market naturally expands and contracts, expands, contracts. So obviously we had an expansion, a contraction, an expansion to the downside, and then kind of a pop back up. And now this is just range bound. And what's nice about it is it becomes very evident when it breaks out. So I'm not necessarily bullish or bearish on it, but I would just watch this very obvious range. And when it breaks, I would just play whatever it is, and maybe you could catch a nice trend. But anyway, I'd be watching 480 to the upside. I'd be watching 450 to the downside. Patience, patience, patience. You just wait till which way it breaks, and then you hope you caught a big fish and you could just ride it. Tesla, very similar situation. I thought Tesla was going to get going right here on Tuesday, May the 21st, ended up getting smacked. So it's still just range bound, but very similar argument to Meta. I like it. I'm just waiting for the consolidation to end to see if I could catch the next leg of expansion. Speaking of just Trump and the political craziness, obviously that's another thing that's just adding to the volatility of the system. It's Trump's whole story right now. Did you guys know that he raised over $50 million in like a day and a half? I saw that he was at the UFC fight last night, and last night he announced that he was creating a TikTok. It took 12 hours for him to amass 2 million followers on TikTok. 12 hours to amass 2 million followers on TikTok. And he just announced it last night at the UFC 302 with like obviously here in Newark with Dana White and all of them. I thought the fights were fine. I know I'm going off on a little tangent here. Those wrestlers from Dagestan are like, their wrestling, their submission skill is just way too good. Like for the strikers to beat them, to have any chance, they just need to knock them out cold, because as soon as it goes to the mat, they're just screwed. Like their wrestling ability is just, it's way too good. It's so good. But anyway, DJT, this is becoming very quickly a favorite for many people, and it has a lot to do with the fact that in terms of like the cross section of popular stocks that also have a high short interest, DJT is that. People are talking about, well, they're saying the short interest is now down to 10%. I think they're having data issues because not long ago it was all the way up here at 75. So like I don't know if they're having data problems or what's going on, but you could see that it spiked up and quickly dropped. It's this orange line. So something to point out, the cost of borrow is still sky high at 350%, and it's on the threshold list, which means there's a large persisting amount of FTDs fails to deliver. And once again, that's all for DJT. Speaking of rum, a little bit of a break. I'm hoping that it can catch itself here at $6 and return to the upside. Obviously, I'm invested in rum. Microsoft, looking like the SPY, looking like the Qs, just higher highs, higher lows. Recently got smacked, but attempting to make a recovery right here. I think it will. Apple, even though Apple has not been having a good year, the last couple weeks, man, it has had a beautiful recovery. A beautiful recovery. Look for this push of 193 because then I'd be looking for that test of 196. Amazon recently faltering, not catching a bid as strong as the tech sector on Friday. So something worthwhile to note, just Amazon on a relative basis to other big tech plays, a bit weaker. GME right now, I mean, it ripped. A lot of people got trapped in here. Then it came right back down. I've lived through this before. If it gets going, it might be another active trade, but do not be married to GME. Do not be married to AMC. Be in the trade as long as the trend is persisting. But right here, there's no trend. It's just sideways. I mean, if it breaks out, cool, maybe be bullish, but it also could as equally break down. Similar situation with AMC. Obviously, between the two, I have much more respect for GME just because AMC, the box office numbers are weak. Their leader, their CEO, Adam Aron, is like just a USDA certified asshole. So I hope people who are in it end up making money. But just like with that type of leadership, whenever it goes up at all, he's just going to dilute. GME looks great. It doesn't look great. This is not the chart of the chart of a great looking company. What are you smoking? GME looks great. What fucking Looney Tunes land do you live in that this looks great to you? I hope it works out for you. I would not want you to lose money. But if you want to know a great looking chart, in here, that's what a great looking chart looks like. This is what a great looking chart looks like. Texas Roadhouse, NVIDIA, even Netflix. These are great looking charts. You don't see a clear difference? What? You're like, oh, that's so good looking. You're just... Jamie looks amazing. In fact, bought at 17. It doesn't. What world do you live in? You might want to take a little bit of a breather on the extracurriculars, brother, because I think you're a little bit confused. You're a little bit confused on what a good looking chart is. But hey, that's all right. That's what I'm here for. That's what I'm here is to help you guys out. Like I said, this is a good looking chart. Right. You see how it just generically goes to the upside? Short term. Yeah, really looks like it's doing something. If by great looking, you mean literally just going sideways, you nailed that one. You really nailed that one. It seems like you're a it feels like you're not biased at all. It feels like you're being very unbiased and quantifiably, like, just looking at it for exactly what it is. Dude, if you saw this chart and you just didn't know it was GME, you would not call it good. Just be honest with yourself. Stop lying to yourself. If you can stop lying to yourself, you're going to be better off in trading. If literally this just didn't say GME and I showed you this chart, you'd be like, it's going nowhere. Because in fact, it is literally going nowhere. That doesn't mean it might not start going somewhere. Of course, we know expansion is followed by consolidation, so it's consolidating. But to say that this looks great, dude, you're just smoking something. You're very much smoking something. Similar situation with AMC. Pops up, it's going nowhere. It's just going sideways. But once again, when you zoom out on any time frame, it just kind of looks like shit. These are not good looking charts. I'm def biased. When I say it looks great, I was thinking about the next couple of weeks. Okay, but once again, all you are is bias. It actually does not look good. What looks good about this? What are you seeing that you're like, oh man, it's not putting in? It popped and it came down. It popped. It could not hold a bid and it got destroyed. That is what good looks like to you. like you said, I get it. You're just biased. Like, and cool, whatever. I hope it works. Like, I don't want you to lose money on it by any means, but you're also like, just like, I don't know, bullshitting yourself. You're drinking a little bit too much of the Kool-Aid. You're not being like logical about it. You're on hopium, and I hope it works for you. Once again, I do not want you to lose money, but to say that it looks good, no, you want it to look good. It doesn't though, so there's that. I guess speaking of that, since we're now kind of going off on a little bit of a tangent, just to wrap this all up, you guys have a better idea of what to look for in June. You have a better idea of what to look for in the next 2 weeks. You have a better idea of this upcoming week. Obviously, I think this system has quite a bit of bullishness in these first couple of days for the overall market. So I'll be watching the overall market, and I'll be paying attention to see how some of these tech plays recover, if they do recover. And I'll also obviously be watching crypto, specifically Bitcoin, to see if it can push above and hold above 70,000. On that note, questions, thoughts, comments. Let's do a couple minutes here of a bit of a Q&A. Are there charts you want me to look at? Do you have any questions on, I guess, like specific terminology? Do you have questions on the Piper signal? Do you have questions on the SIM to fund into Apex stuff? Anything on your mind? Anything on your mind whatsoever? Questions on charts, definitions, any of the tools I use, anything at all. We already looked at RUM. XOM. What's going on with Exxon? Nice recovery right there. I mean, this is super, super basic, but you could argue it's a bit of a trend line breakout, but if you want to be a bit more conservative, you could push it to the extreme. But oil, I mean, this is going to be directly related to oil. So watch this. We know that Biden, he is once again gouging the SPR, the Strategic Petroleum Reserve. So that is clearly going to have implications on the price. So you might want to be paying attention more to what Biden is doing, because he said that he's going back into the SPR to keep oil, or to keep basically gas prices low all the way up until the 4th of July. So I'm definitely watching this closely, but I want to point out how in its recovery effort, oil just got rejected pretty hard. So if it ends up breaking down below 76 and oil goes down, obviously that's going to have a bearish impact on something like Exxon or Oxy or whatever those other plays are. Good hair today. Only a few complaints. Happy birthday. Appreciate that. Google Cloud deleted $125 billion pension fund. Well, that's awkward. 77 a barrel is low. I mean, low is relative. I mean, at one point we were all the way up here at 115. Not long ago, we were even higher. Depends what you're talking about. Sometimes we went negative. So it's really expensive relative to when oil was negative, but it's cheap relative to where it was trading at 110. So it depends. I don't know what are you anchoring that to, Jason? Can I look at FFIE? Yeah, FFIE is absolute fucking shit. This is garbage. I would bet my entire net worth that, given enough time, this stock comes right back down to where it was, around 4 cents, 5 cents, and it'll probably happen sooner rather than later. The fundamental value of this company is dog shit. Obviously, in terms of like the active trade, like the FOMO excitement, well, obviously that's recent hit and loss. This is trash. This is absolute trash. And if like I just see a lot of people drinking the Kool-Aid of this stuff, of not really following price action. They're not following fundamentals. They're not following anything besides hopium. And that's all FFIE is. FFIE is complete trash. What was that other one that people were doing? GWAR or something? GRAW? I don't know. There's another one like it, but they're just trash. You can make money on it if you're quick. If you get in, respect your risk, ride the trend changes, you take your money and you leave. It is potentially a money-making opportunity, but the money-making opportunity right now is obviously to the downside. At one point, it was to the upside. Then you had this big red day, and then all of a sudden you had an inside day that started breaking down. The party was over on FFIE right here, Wednesday, May 22nd. You pop up, can't hold, breaks to the low. The party was over this day. Opt is the other FFIE, so it's just the other like shit. What do I think about Meta? We already covered Meta. AFRM, what's a firm up to these days? Not looking good. I'm actually surprised though. I really am, because for those of you who don't know about this company, it's buy now, pay later. And right now, with debt going up and people feeling the financial pinch, I wouldn't be surprised if, from like a true fundamental value, if a firm starts to do a little bit better, because as people are forced to buy now and pay later, you would think that a firm would catch some sort of bid. But in terms of right now, what we have, lower highs, lower lows, obviously the bears are in control. So I would just be waiting for a push and a close above the EMA cloud. What else do we have? Sorry for the repost. How much do you think the BOE and BOC Fed decision will affect the U.S. markets? They are predicting rate cuts. This time around, they are. The BOE is expected to cut rates this upcoming week. I don't see how they could, because they started raising rates after we did here in the U.S., and their inflation is proving to be as sticky as ours is. I would have to, I guess I just don't know. I'm going to have to look into it. I'd be really surprised if they cut before the U.S. cuts. Really surprised. Yeah, because their inflation is so high. I'll have to get back to you on that one. That would catch me by a bit of a surprise if they cut before the U.S. S-Bucks. S-Bucks making a decent recovery. Decent recovery on S-Bucks. Upside gap fill at 87.18. The one thing that I want to let you know about is just be careful, because the cost of coffee itself is skyrocketing recently. From basically October of 23 until now, coffee, like the commodity itself, coffee is becoming more expensive. Obviously, as it continues to go up, that's going to be eating into the margin. So that's more of like talking about if you want to invest into Starbucks. But if you're more of an active trader, higher highs, higher lows, you could anchor a long position off of 77, and you could play it for the upside gap fill at 87. How's OJ doing? OJ started to actually squeeze again. Frozen orange juice started squeezing again. So huge squeeze in orange juice. Then it took a hit. Then it consolidated forever. And then starting at the beginning of May, it just once again ripped. Like OJ, just huge rip. Now it's coming back down, but I wouldn't be surprised if there's more in this one. I wouldn't be surprised. I mean, OJ's been on a wild tear since 22. I actually, like, to the point that like it kind of interested me of what was going on. And I guess there's just been multiple years of crop issues in Florida, and Florida happens to be like one of the largest producers, if not the largest producer of oranges. And with just like this lackluster supply, I think there was a disease at one point. There's just been basically a supply shock, and it has not been good. And now we're seeing prices continue to go up and up and up. The ECB also kept rates at to hold a record 4%, 4.5% respectively following their meeting last month. Despite a few members arguing for an immediate cut, we can continue this. I don't think they're going to cut. I mean, even here we have some of the members argue for it, but I don't think they're going to cut. How's corn futures? Oh, corn, ZC. Actually, corn's getting cheap for whatever reason. Corn dropping sideways, pop, not really doing anything. How's live cattle? A little up, a little down. Nothing too nuts there. All right, folks. We've actually kind of almost went double the time than I thought we would. Obviously, shout out to PDS Debt, pinned to the top of chat in the description of the video. But also don't forget, if you want to join the Discord, you do so like through locals. That's how you get the Piper signal. That's how you get the private lectures. That's how you get my trades, how you get other members' trades. It's basically just a group of active traders bouncing ideas off of each other every single day. The private lectures are much more of a mathematical deep dive into the statistics of the market. And then Piper is obviously one of the strategies that we use with those statistics in mind. So if that's all interesting to you, you can try it out for the first month for 100% free if you use the code Goonie. My mod will drop the link in chat right now. But But I do appreciate you guys. I get that this was a little bit of a specialty thing, but I think it is kind of useful every once in a while to take a step back and look at a slightly bigger picture rather than the day-to-day action. So if you guys enjoy this, I'm more than happy to start doing this every single Sunday, kind of like a look ahead at the upcoming month, the upcoming week, rather than like what's going down exactly that day. So let me know in a comment if you enjoy this or if you don't like it at all. But as always, I do appreciate your time. I hope you're having a phenomenal weekend, and I'll be catching you again tomorrow morning, 9 a.m. bright and early. That's what I have for you. Peace out. Much love. Peace.